Good morning. How are we doing, everybody? Welcome to Tuesday, the 8th of April.
Turn around. Is it a turnaround Tuesday? That's what everyone's asking. Is it a turnaround Tuesday? Let's figure it out, I think.
Yeah.
How are you? You good?
Survived. Had the best sleep of my life last night.
The best sleep of your life.
The best sleep, because I had 2 hours on Sunday night.
Right.
So I was, by 8:30 p.m. yesterday, I was like, I can't look at it anymore. I've got a setting on my watch which shows me every 0.5% move in the S&P 500.
Well, you need to switch that off first and foremost.
Usually 2 a day.
Yeah.
It was 42 yesterday. So
hang on. So the only thing that needed charging was your phone, your watch, and then yourself.
and my balance. Yeah. How are we all doing? Who made it through then? I guess if you're joining us this morning, you are still in the game. Whoa, what a rough roller coaster we've had. We know that Pete Ward is at Euro Disney. Well, he's not the only one that was on those roller coasters yesterday.
Yeah.
How did the day go for you, Luke?
Well, about as good as it went for everybody, really. It was wax on, wax off. That's what it was. Mm-hmm. It was, a morning session for us that was just busy. So I think in the last 2 sessions, I worked the Friday US market shift, and I worked yesterday early. 2 of the busiest shifts that I can remember.
Right.
Just in terms of phone calls, queries, questions, updates on account. Where does this happen? What's going on with margins? What's going on with figures? Everything. 2 of the busiest shifts that I can recall, and we're going back to kind of COVID times. So That's what we've just been through.
Yeah.
We've had 2 of our most active days in terms of trading numbers on the platform.
Wow.
So the actual number of trades that have come through the system.
Which makes sense because the volumes on the CBOE and everything, highest ever.
Yeah, literally. So we've had 2 ridiculously busy days. And yesterday was a game of 2 halves, really. Yeah. Europe crashing down on the open, right? I think, you'd have seen it from the Sunday Open. I know you guys discussed it with Ronnie yesterday. But crashing down, I was sitting there talking to clients, looking at Lloyd's down 8% in the auction, NatWest down 10, those kind of things.
Get me out.
Basically, get me out.
That's it.
Yeah, get me out. And it just felt like a flush. It just felt like 3 days into a really strong sell-off. Psychology, account finances, margins, you're at peak stress. The VIX was spiking up at, the daily VIX, and I actually want to kind of come on to this in a bit, but the daily VIX was up above 45 yesterday. And then US markets open up and we get the tweet.
Well, no, there were 16 minutes of a sell-off. At 2:46 p.m. we hit the absolute lows, and then
we got the tweet.
Somebody, stepped in.
Well, it was the chap. It was Hessent.
Yeah.
So one of the senior economic advisors to Trump was on CNBC.
Fox News.
Fox News. Yeah. Sorry, Fox News. And he was basically discussing the tariffs. What do you think about this? How's this going to go? And he was quizzed on, would you pause? And he goes, well, yes, I think there's reasons to this.
He said Trump will do what Trump will do.
No, he actually, because he kind of went, like this.
Uh-huh.
And then he said Trump will do, but he actually said the words, yes, we're trying to figure it out, we'll see. Boom. Aggregators, algos.
Well, no, it didn't happen. So that was 45 minutes earlier, right? It was only when people started putting the tweet out of that short
right.
thing.
So it was picked up.
And it was picked up
around 2:45.
3:15.
Mm-hmm.
And that's when we saw the 5% move in a straight line.
Yeah.
So one of the top names, Michael Bloomberg, I think it was, retweeted it. And that's when you started to get the...
No, it was Walter Bloomberg.
Walter Bloomberg.
Yeah, Walter Bloomberg's this anonymous kind of news assimilation account. Brilliant to follow, but sent it out and then off you went.
And then that was what an opportunity to get out of any problem positions you had.
Oh, yeah. But by the time that I texted it out to my clients, I sent it out, everyone's come back like, great, cool, this is really great, everything's going to happen. You just saw the market do this.
Yeah.
And then we saw it start to really peel off, and we're now scratching our heads going, right, well, what's happened here?
Yeah.
Furiously looking around
CNBC were really good on the, right, straight to the White House, Eamon Javers, have you heard anything? No, we've heard nothing. And that was the market was at 52.40, and CNBC got the denial out straight away. And then 15 minutes later, the White House press secretary said it's fake news. And we were still at 51.15, but having said that, there was then a bid in the market for the whole rest of the day.
Yeah. It feels like whatever happened gave people confidence.
Yeah.
Because all of a sudden, we were talking to clients all morning about, do you buy this dip? How do you even think about it? And I was saying to people, you can't, if you're trading this move, there's no low. We don't know what the low is because it's not been tested. Okay, we've broken through a load of key levels. We are now trying to bounce off of it, but it's not been retested. So you don't know where to put your stop if you're buying. And that was the really tricky thing. And now you're getting some higher lows. Now you're seeing levels retested a little bit. So at least now you can have some degree of confidence.
Let's take a look at the VIX as it happened. So we've got our volatility index here, which is an amalgamation of all 3 front months, right? So don't take this as the absolute number, because you can see that in this it hit a high of 35. No, we were up in the high 40s yesterday on the near month. So
not on the near month, to be clear. So we were getting loads of questions about this yesterday. The VIX that everybody reads and sees, it's a number. It's not a market. It's a number. Okay. So if you Google, there you go. The VIX up 45, above 45. This looks at the 30-day options expiring, but right now. So it basically gives you a value of VIX, today's value of VIX.
Yeah.
What you're trading on our platform is the monthly expiries of where the VIX is going to be priced in, whichever months we have on the platform.
Which aren't actually there anymore, are they?
The futures?
Yeah.
They're not there?
Not on CFD, because I was looking for that yesterday because I wanted to trade the front month at 46 and then against the others. But
yeah, you should have them.
So
we've got April, May, and
those?
June.
What's April?
April's 31.90, May 27.30, June 25.50.
Right. So there's a great example of what you've got there, of the near term. However, where's the graph again? There we go. So that shows you that at 10 p.m. on Sunday, that must be 11 p.m. Yeah, 11 p.m. on Sunday was that moment when we opened down 5% and you had the absolute peak here. And then by the time we opened yesterday at 8 a.m., we were still at 33.5, but you can see from 10 a.m. onwards, there were sellers of all in the market, and thank goodness.
Yeah, but it is a big distinction to make, though. You're not, on our platform, you're not trading the number that you're reporting on and everybody's reporting on, because it's just a number. It's not a market. We have to find a market using the futures to find a bid offer. And then what we do is we take the 2 front months. So we're taking April and May, and we're basically creating a weighted average between the 2. So you'll always see that our daily funded, or the cash VIX, is going to be between the 2 front months.
But then on Taste Day, you're trading the
VIX futures
there.
VIX futures directly.
Which are, they're that front month, 31.75.
Correct. Yeah.
Right.
Just needed to clarify that because we had so many questions on it yesterday.
Right. Shall we go to what's coming up on today's show?
Yeah, if we can stop bleating on. Right, so you've got me and Rich through till 8:30. We're going to do the opening bell as usual, and then we go to fast markets. Then at 8:30, it is live from the trade desk with Matt Arbour getting involved. So ask him those questions about the vol.
Yeah,
that'd be good to get his opinion on it. See how kind of the difference between the dailies and the VIX overall. Then you're in here. Oh, you're all by yourself. 9 a.m.
I am. It's one of those ones that everybody's out on the desk at that point.
We got jobs to do.
So exactly, yeah, the proper jobs. And then we've got 9:25 Trader Tools with me and work from home. He's in. 9:40, we're going to see, actually. We're going to see how the market is. We might have Chris Beecham come in. He has got a press interview at 9 a.m., but we're trying to drag him out of that onto the proper press right here and now. So we might have Chris Beecham in at 9:40.
Perfect.
Good morning to you all. How are we doing? Monkey Man, I see your great comments on Bitcoin death cross this morning. Away from the numbers, we see that you are in transit, so you've got audio only. That means we can say anything we want without any backlash from you.
And you can see we haven't dressed the same this morning at all.
Yeah, the uniform, same as Ronnie and I yesterday, actually. So we've got Gavin Ackers. Good morning to you, Maturin, Hola Chicas, Steve Davies. That is the question of the day. Was anyone brave enough to pick up some bargains? Do tell us on the chat. Don't be shy, you lot. You never usually are. Tell us what your best purchase was yesterday. Did anybody get Lloyd's under 62 pence? Did anybody pick up Rolls Royce down 10% on the day? Tell us what your best bargain of the day was. Wacka Wacka, no, Walter Bloomberg didn't make it all up. It was a retweet, but agree around the legality. Stuff on Twitter and any social media you got to take with that pinch of salt. Most definitely. Cool. Yeah, go to overnight action.
Let's have a look. Welcome back to overnight action on Tuesday, the 8th of April. Where do we start?
Well, we start with the biggest bull in the market apologizing. Tom Lee, we got it wrong. So that is a fun strat, of course, Tom Lee. He is and has been for the last
It's been amazing,
2 years, been calling it beautifully.
So right.
But always when it's at the top, when it's 6,250, the bulls are always out saying more, more, more. And we've had 2 examples of it overnight that sometimes they should just take their great job that they've done. He says, we want to apologize as the terms of Tariff Liberation Day were far worse than expected. The resulting market fury is not due to reaction to a trade war, but rather the fact the White House broke a core covenant of capitalism.
Wow, bullish.
He's not holding his words.
He's definitely not holding his back. Well, he's wrong, isn't he? So he needs to blame somebody.
True.
He's got to blame somebody, right? Because his investors have just lost a truckload of cash.
Yeah.
I like him. I think he often, as everybody that's naturally bullish usually, he can often provide a tonic, I think, to the sensationalist way that stories get reported.
Yeah, true.
So I do quite like listening to him. But fair enough. I mean, he's pulled his hands up and said that he's called it wrong. Price has got a funny way of doing that, to making you wrong. Which is why you should always use stops and risk management, because we can't control where the price is going to go. You absolutely can't.
Especially, and this leads us perfectly into the fear and greed index. And this shows you when that fear is hitting, right, as we saw on Sunday night. We've showed you the VIX. This is obviously a kind of inverse VIX. This is the CNN fear and greed index. We dropped to the lowest level that we saw back to October 22, when you remember we hit the lows at 3,600. So you've seen that come off, and then the red is, of course, the S&P. So even when we were right at the highs, 6,130, we were relatively equal, actually.
It's quite incredible, though. You see the S&P rallying all the way up through kind of 2024.
Yeah.
Yeah, this fear and greed is just sliding, technically. It's that wall of worry, isn't it? There's always something to be concerned about, always. And you do end up in a bit of analysis paralysis. But when it's extreme like this, it's historically proven to be a pretty good signal.
Yeah, of course, think of this like the VIX. So you see here on the left-hand side, we've got a line at, must be 75 on that one, and we've got a line down at 25. And at the moment, we're trading at 4. So that tells you, when we talk about fear like this, I was scared on Sunday night.
Yeah.
We chatted. Look, you were fantastic for me on Sunday afternoon.
You caught me.
Thank you for that.
You caught me at the perfect time. I was on a train.
Ah, brilliant.
I was on a train. Yeah.
I did think that's, mate, very long responses. So I hope I'm not catching you at lunch.
No. So I was sat there. I had the dog on one seat, and I was sat there and I was watching I was watching kind of financial YouTubers.
Get a ticket for the dog?
No. And I actually came close because...
Get a seat then, does it?
Well, this was the problem, right? I was coming back from the Midlands, and so I was on one of those trains where you've got to book a seat. And so I got there, and I'm like, oh my God, the seats are all taken. The dog hates sitting on your lap at the best of time. She wants to sit in the alley, kind of the alley aisle.
Oh, yeah.
And so I was just like, this is just going to get the worst. Anyway, I kept walking, and eventually found a seat. And that was when your first text came through. So we were ducking and diving, margin questions, market questions, when are things opening, options, stocks.
Because I said my worst worry is that we're down 4% at some point overnight.
And you're short of capital.
And and suddenly it's like, right, how do you shore that up?
Yeah.
Now at this moment on the weekend indices, we were down 0.5%. So this is a kind of worst case scenario. Bang, worst case scenario. As soon as the market's opened, down 4.2.
Yeah. So it's funny the way those weekend markets work, because we are making that market. So we quote a price, and then buyers move the price up, sellers move the price down, right? It's just a book. Yeah. And I've watched it over the past couple of weekends, and it's been really quite quiet, which to me means people are not wanting to look and add risk over the weekend. So it's not the case that, the market price is right or wrong, but rather people are just going, I don't know what's going to happen. I'm just going to wait. I think we've had most people flattening off into the weekend. So I've observed across the clients that I look after, quite a few people have kind of flattened off their risk.
Oh no, my WhatsApp group was kicking off all Sunday morning. There's nothing. I'm like, he's not even awake yet.
Yeah.
Give him a chance. Yeah. But then we saw crypto. You were exactly right. You said crypto.
Crypto was the first thing to go. Yeah. If you look at risk assets that were open, crypto was off heavily on Sunday night, and I just said, you want to look at that. But then we were there was so much copium in the market, because I was saying, we saw some news out of, was it Japan or India? You text me to say
India.
He was like, oh, India are going to come to the table. I was like, great, okay. And then Taiwan are coming to the table. Oh, all right, okay, cool, right. We're bulling ourselves up. There's some good news, but realistically, it was just no news. But what has been news, and we saw it yesterday, was China. So China vowing to fight to the end. If you look on the Financial Times this morning, China are vowing to fight until the end after Trump has threatened an additional 50% tariff. And he fired that off, I think, at about 4 o'clock yesterday. So you're seeing these market gyrations. You're seeing this rally, then this crash, and then this kind of sustained move higher. Then he says he's going to put more on China. Now, what's interesting is this chart here. I've found a chart that shows you.
Zoom in on that.
I can zoom in on this one. This is China's export destinations last year. 16.4% of their exports go to the US.
Interesting.
Which means
I would have been a massive buyer at that.
We thought it was higher. Yeah. So would I. So this is from China's official data, official website that's been assimilated. So it's probably not true. I'm quite surprised to see the UK is tiny. And I'm also surprised to see that actually pretty much the whole of the European Union is the same as the US. Because if you think about if China are now going to be tariffed to the hilt, where are their goods going to go? Because they're going to have to find another buyer for 16.4% of their goods. So the FT ran a piece on their morning podcast this morning saying that they were going to probably dump it into the EU. Yeah. Which could potentially be quite deflationary. If you flood the market with cheap supply, the prices of everything else is going to come down, because they're going to have to be, you're going to get a demand shock. So does that become, recessionary? Does that help the ECB lower rates because it's deflationary? So then they can cut rates to try and stimulate the economy. So there's so many nuances about this trade war that are not just tariffs, taxes bad. There are going to be these little pockets of volatility. So you're seeing this morning, Europe are up quite heavily. Before I came in the studio, the FTSE and the stocks were up about 2% apiece.
Yeah, you've got to say before I got in the studio, because they could be anything now.
It could be anything now. Yeah, I don't know. Especially, what have we been in? We've been in for 20 minutes, so we don't know what's going on. But you're starting to see these gyrations, right? Yeah. And is the market starting to wake up to the fact that Trump's just an additional 50%? Whatever. There you go.
What I think you're starting to get a discount on the headlines.
Yeah, you're starting to see the market go, it doesn't matter anymore. Yeah. We're calling your bluff. Clearly, if you want to call it turnaround Tuesday, you've got European stocks up really heavily. You've got Japan up because Basant is leading the charge with a trade deal with Japan. So Japan, the Nikkei was up about 6% overnight.
This shows you how ridiculous the whole situation is, right? Trump set out a tweet yesterday. Sorry, there's the futures to look at while we're nattering on. Trump sent out a tweet yesterday saying ramen is back on the menu. And that was the official announcement to say that the Japanese top tariff team of negotiators were coming to the White House and they were on their way. Ramen is back on the menu. It is. What world are we living in?
He's a character, right? You like him or loathe him. I mean, everybody hates him at the moment because he's just made them take a 30% on all of their long equities. Thank you very much, sir. But he's a character and he's a showpiece. He needs to be the centre of attention. So we spoke about it before Liberation Day. Supposedly, he's got a team of very, very smart people behind him, right? Fund managers, big people of business, titans of the financial world. But he is the front man.
Yeah.
Okay? And he has a brand. And so, whilst as ridiculous as that sounds, it's very on brand for Trump, isn't it?
Yeah.
Shock and awe. Yeah. It's ramen's back on the menu. He's going to be on all the headlines, tweeting out ridiculous stuff. Is it an interesting negotiation tactic? If you were negotiating with a madman?
Well, no. Let's.
How would you approach it?
Well, the first thing you've got to realise is not a madman. If there was no such thing as markets, what he's doing is right. What he's doing is getting down that budget deficit. It's actually previous administrations that have been completely wrong, right? And just let all discipline go. So what he's doing is right. It's just the way he's going about it is shock and awe.
Shock and awe. Yeah.
Right. Now, what he said yesterday was Netanyahu came to the White House and offered him things he hadn't even thought about. So suddenly, this is his win, right? Vietnam, tariffs off. America. Japan, negotiating. So he is getting the right result. It's just that nobody's ever used to a politician doing the right thing, not trying to buy votes. And that is the absurdity that we get in politics, is all they ever care about is the next 3 to 4 years. But you've got midterms as well. So it's all, Angela Merkel had a whole career of it, of pleasing people. And now Germany's in the toilet.
Yeah.
Right? So there is some behind the craziness, and as we're just so unused to the methods, what he's doing is actually could have an incredible outcome. If I was American, I'd be cheering for it.
Well, yeah, there's been loads of polls run. I mean, maybe it's just because I've got a fairly Americanized Twitter feed at the moment.
Yeah.
But every poll I've seen is in support of what he's doing.
Yeah.
If the S&P didn't exist, you're right. You'd argue that you've been doing the right thing.
Right, there's our first poll of the day. Is Trump a madman or
a genius?
No, I wouldn't go that far. Or is there a plan? Is Trump a madman or is there a plan? Let's go for that one. Phil's going to pop that one out, and in the meantime, we
need to go through some UK equities.
Yes, we do. Shall we do? Let's take a very quick 2-minute break and come back and give ourselves some more time. Join us in 2 minutes for the UK Open. Is anybody going to be up 10% today? That's the question.
Let's see. Let us. Welcome back to the opening bell on Tuesday, the 8th of April. I can't get my dates the right way wrong. The right way wrong. wrong way around.
It's still going.
Brains mush after the last couple of days. Welcome back. The market's about to open and we're here to help you out with it. We have got...
We look at the downgrades and upgrades.
Let's look at the grade downs and the...
There's only one. There's only one group. That's when you know the market is approaching a low. Now, the big one, we mentioned Tom Lee already. Now let's go to Dan Ives. Dan Ives is the guy who dresses in the very bright coloured suits, did a spread in the New York Times last year, like laying as some kind of model, because he has been Mr. Tech and Mr. AI. And he's the guy that says, look, if AI was a party and it ran through till 5 a.m., we're only at 9 p.m. So, you know, sounds like there's been a bit of a power cut at the party right now. So he downgraded, forget the decimal places there, they're completely wrong, Apple to $315 and Tesla to $250, right? So those were huge downgrades by about 40%.
Oh, no.
Yesterday. JP Morgan downgrading Pandora to neutral. How is that thing still around? Pandora used to buy my sister...
Yeah, it was like buying my mum little things for a wrist.
15 years ago?
Yeah.
And then RBC downgrading UBS and Deutsche Bank ahead of earnings. So those European bank stocks as well. Look, what else you got for us before the morning?
In terms of some UK stories, not a whole bunch out this morning. We have Howden Joinery. I think that's their CFO has mentioned they're going to retire. Hilton Food Group have come out with their preliminary...
Sorry, gents.
The Hilton Food Group, I still can't get my words out. HFG, preliminary figures, their adjusted earnings per share was slightly higher than expected, 61p versus 59 expected, with a profit before tax of 61 million. And they've outlined that their trading is seen in line with views. However, they are getting killed in the auction, down 6% as an early indication. Unite Group, the student property manager. Good numbers, yeah. They've seen strong demand. Outlook for student numbers are positive in 25-26 academic year, and they're on track to see between 4 to 5% growth in the rental market. And they're throwing up tons of stuff near me, just around Borough and London Bridge. There's tons of stuff going up. Up 1.6% in the pre-market.
Elsewhere, we got Berkeley Group up 3% because the CEO put his money where his mouth is, buying £500,000 worth of stock yesterday. Berkeley CEO getting stuck in there on this sell-off. Foxtons announcing a buyback, looking up 3% in the auction. Broadcom mentioned.
Yes, Broadcom have announced a $10 billion buyback last night, which we did the number as about 1.5% of the company.
Right, so futures up 1.5%. What are we going to get on the open here?
What we didn't get a chance to answer, just quickly, Pure Tech Health, a bit of M&A play in London. If you want to jump my screen up, guys. Pure Tech Health, PRTC, there is a private equity business, Nordic Capital, have said that they now do not intend to make an offer for Pure Tech Health. They've been rallying up recently, and there was some press speculation yesterday. They were strongly up in New York, in the ADR that was trading. They're up about 16% in New York. They are not open yet. They're indicating down 7.8%. PRTC, watch out for that.
Wow. No, guys.
We're open. Are we?
Are you getting prices?
Am I getting prices?
No.
Let's have a look.
Right, let's have a look at what we've got.
We have got pricing. So we've got Barclays up 2.2, we've got Rolls-Royce up 2.3, Lloyd's up 2.5. Blimey, what isn't up over 2%? BP up 2.8, Glencore 2.2. What else do we have here? Marks and Spencer's up less than that, 0.6. We are on the move. How are we looking?
So Burberry up 3.5. Scottish Mortgage Trust up 3.3, BP up 3, Barclays up 3, Shell up 3. Really interesting moves here. As expected, just a mark up.
Oh, SMT back above the price I bought them at yesterday, £8.40. That was me just dipping my little toe back into my long-term positions. What else are we seeing there? Legal and General up 1.7%. Now, Legal and General, I want to know what their dividend yield is because I think they are now flying.
Yeah.
Stock. Let's have a quick look at this. Elgin. The dividend yield is now over 9.8%.
9.8.
9.8%. This is what I mean. You're going to get high quality businesses at silly valuations.
I literally texted my brother-in-law. So my brother-in-law used to run the finance department for one of the district councils up in Scotland. He is so old, he's now got a payoff. Shout out to you, Stu. So he is, but of course he's at the age where he can take a lump of his pension,
Right.
Tax-free, but he's sitting with it in cash in his bank account. So I texted him this morning and went, oi, miser, right? This is the guy that sits with a bottle of 25-year-old Balvenie.
Oh, lovely.
And is saving it for a special occasion. What more special occasion do you want? You're right. You've taken your nice council payoff. Time to get stuck into the market. So he's taken a look. But that was the kind of opportunity yesterday where you just had those huge moves down, didn't you?
Yeah, you really did. I mean, can we just take a quick look at IAG up 7%?
Is it really?
Which is huge. In fact, it's not even out of auction yet.
Well, I was going to say, I don't have that one.
Indicating 240 spot 4 up 7%. Have we missed a story there? Let me have a look.
I don't know if it needs a story after the last few days.
7% is no, we haven't missed a story.
What was it down yesterday though?
They've been buying back their own stock over the past couple of days. It was down some. It was down.
Where does 7% take it to on that chart? Because look at it.
Oh, sorry, you're on. We are on my screen.
Such.
That was yesterday, down 6%.
Yeah. So, okay, so it's getting back what it lost yesterday.
Yeah, it's basically going straight back above. What is that? That is the red line is their 200-day moving average. If we open at 240, which is where it's indicating, that will pop us right back on the 200-day moving average.
Here's an interesting one. The algos are in selling the defensives. Look at this. If this is, it's so obvious what is happening here, right? Because that, you could not list a more defensive basket than that. BT, National Grid, SSE, Severn Trent, Vodafone, they are all the laggards there. And I'm going to have some of those Vodafone because they are for sale because this algo is getting into all the spicy stuff, right? So they just put on the pair, they buy all the spicy stuff and they sell all the defensives. Even though those defensives are down 15% well, some of them are. SSE not quite. Yeah, some of them are only down 7-8%. Vodafone down 15%. And you've got, it's like, I can understand Marks and Spencer's being small down. I can understand Tesco being unchanged. But yeah, BT down 2% looks ridiculous.
So I think what's interesting...
IAG open up 6, there we go.
Oh, IAG opened up 6, nice. I think what's interesting is looking at the miners actually. So copper is not back yet.
No,
Copper's now
2.8.
Yeah, but it's
big rally.
We are 2.8% up, but we are still heavily down though. So heavily down. Yeah, what we're seeing.
Iron ore has been crushed overnight.
Iron ore.
That's the ultimate China policy.
Daily, and I need to make this look nicely so that you can all see what I'm looking at.
But yeah, strong bounce in copper today up to 434.
Yeah, but we've got Antos up 3 on the back of this.
Yeah, copper's up 3% now.
3, yeah, I suppose it is. Antos are up. We've got Glencore up 3.4 now. The Fresnillos are up 2.2. So worth keeping an eye on those guys.
Ferexpo up 4.6 as well. My goodness, that got down to 47 pence. Yeah, blimey. Right, Shell up 2.5, BP up 3. So look, this is where you saw this blanket selling yesterday, right? This is not necessarily people at home buying and selling, right? Nobody wanted to sell BP down at 335 or whatever it got to yesterday. That is forced selling. And when there's forced selling, there's no price, right? That is the pret-a-manger at the end of the day trying to get rid of their stock.
And there's no buyers.
And there's no buyers, so they go and give it to the guy that sits outside my local in South Kensington with his deck.
We've seen that. We've seen that at IG. You know, as we see client flow coming in, we've seen that there have been no buyers over the past couple of days. And so it'd be really interesting to pick Mac's brain on how that changed yesterday afternoon, because I know on kind of Thursday, Friday, you know, we're seeing one directional risk and it's all on the sell side. So we actually haven't seen a huge amount of buyers stepping into the market. It'd be interesting to see if that's starting now.
Well, the alleviation of selling pressure, right? And the selling pressure is the get me out. It's the force cutting. That feels like it disappeared yesterday because people have got, when you don't have an option, you just get chucked into the market in the first 50 minutes of trade at market. And that's why the S&P hit the trough at 2:46 p.m. yesterday.
So have you noticed as well that this selling comes in waves? So, and I think it's got quite a lot to do with when people can get access to the markets. So the US markets for options are only open during the cash hours. So if you need to do anything because you're being revalued at overnight,
can I screen up while we're chatting, please?
If you're seeing anything happen, it happens at 2:30.
Yeah.
Right. We can give clients access to the US stock market on the CFD and spread bet side from 9 a.m. Perfect. You can do whatever you need to do. Not everybody can.
Yeah.
A lot of brokers only provide people access from midday to the pre-market. And so you see a bunch of vol come in at midday, because likewise with our cash equities, you can trade pre-market from 12 p.m. Then you see another wave. So you get the 9 a.m. shift, you get the 12 shift, and then you get the 2:30 shift. And the 2:30, excuse me, is probably the biggest one, because anybody who's got options all of a sudden gets revaled.
Oh, definitely.
And that's when you start to see the stress. You start to see these IV expansions. You start to see buying power restrictions. You start to see everything come through at once. And that's when you have to act. But yeah, interesting. You also tend to see if you've been assigned on options by about 12 o'clock as well. That's when you tend to see it hit your account.
Right. Right, BAE Systems down at 1520. God, that was, what did we get to? 1650 at one point. Barclays 245 from £3. Anglo's £18.40 from £24. British American Tobacco £31 from £31.50.
Nah.
It's literally dropped 1.5%. But interesting to see that up today. Why is that one up so strong? I would have thought that would be in this basket. Yeah. Legal and General up at 220 this morning.
Just buying quality. Yeah. Boise, I think you make a good point there. IAG up on the low oil price.
Is oil down today?
Oil has been down. We haven't looked at it yet today. Where is oils? Oils are small up.
Yeah.
Less than 1%.
So Boise, you're right. But again, this is now people thinking logically. When vol's on the way down, you can think logically and you think, wow, IAG with an oil price down at $60 is a big positive. Therefore, they should be going up. And that's the kind of thinking this morning where people sit back from the panic and you can pick up some bargains.
Yeah, completely. Have we looked at Europe? What's going on in Europe today?
Dare we?
Yeah, let's have a look at Europe. Eurostox was up heavily. The same Eurostox index was up again before I came into the studio, 2% before we got here, and it is now up 1.2. It's given a bit back.
ASML 569. SocGen we see up there up 2%. Ryanair, another one. As Boise says, into the airlines. Havas 120. Got down to 117 yesterday, and then my ISA provider.
What? Excuse me?
My ISA provider.
Yeah, hang on. What?
I know. This is the problem. I can't have all my eggs in one basket.
No. Well, you can.
But,
you definitely can.
It used to be a rugby stadium in
Manchester.
In Dublin.
In Dublin. Used to be.
Is that
There is still a rugby stadium in Dublin that is named after
right?
well, the Aviva, right?
Yeah. So yeah, but it's the area that it's in.
Okay.
Yeah, they do not provide me access to Havas.
They don't provide you access to Havas because it trades in France.
I'm like,
no, it trades in Amsterdam.
yeah.
Yeah.
No, I think it's just because it's a
European name.
smallish new stock. They don't quite have the speed of updating things as we do.
There you go. You should move it across to us.
Yeah.
Although, in fairness, I don't think we have cash equities in Amsterdam either.
Right.
I don't think we have coverage. So,
Okay.
so
Interesting.
that one might not tick the box yet. We do in France. So if it's a French listing, maybe.
Right. BNP Paribas up 1, Airbus up 2.7, BMW up 0.3, and again defensive Eon. That was one of the stronger ones the last few days.
I've done some digging, and the only thing that I could find in terms of the airlines, sorry to come back to the question we were just talking about, was Finnair came out with their passenger figures. That's the only thing I can find.
Going to move them.
I don't think Finnair's going to move the market, especially when they said that their March passenger numbers were down. Weirdly, they've defined it as the passenger kilometres travelled.
Right.
Interesting, but down 2%. They did say that their traffic increased significantly in the North Atlantic, but remained stable in Asia and Europe.
Okay. Good.
So,
right, Fraser's seen a nice bounce. They're up 1.2. Next, what? I mean, look, talk about a port in a storm. Let's see how this thing has traded over.
Port in a storm? Storm in a port? Or storm in a teacup?
No, a port in a storm.
A port in a storm, as in, you can park your boat in a storm and you will be safe.
Safe place to be.
Okay, all right, I've learned something. Safe port in a storm.
Yeah, look how that one. Okay, it's off 8% from the very highs, but over a 6-day period, then this thing largely unchanged. But interesting. Is there an argument of 112 is the right price? I'm not sure, but. Anyway, a great place, and of course, Simon Wolfson, is it the CEO?
Couldn't tell you.
But yeah, this chairman of Next, just what an incredible job over.
Do you shop in Next?
In emergencies,
yeah.
If I need a suit for a wedding or a funeral and I haven't got access to my stuff was in storage for a while, then I do.
Nice to go.
Yeah. And we're getting Dr. Watson pitching in from the gallery that his mum used to take him there for his work interview clothes.
It was always like where I'd go for, when I got to sixth form, I'd go there for my school shoes and I'd go there for my suit. Do you know who is making a bit of a comeback though in the kind of clothes that you might want to wear? Gap.
Yes.
Gap are making a bit of a comeback.
With a few influencers with the hats on and everything as well.
Yeah.
Let's just touch on that chart before we look at. So this is when I started in the city. Next was the first stock I ever traded sitting at the desk at Credit Suisse. It was trading at £14, and look at what he has done over those years. Absolutely incredible management of a business. £14 to 110.
Yeah, you can still pick up 2% dividend yield on this as well.
Yeah. So yeah, that's cash. All the dividends.
All of the UK stocks, well, say not all of them, you can get really healthy dividends on these. Mm-hmm. Especially at these valuations. The FTSE index itself usually tends to yield around 3%. Let me just quickly look at the FTSE dividend yield. 3.95% at these levels, 4%. So you can buy growth and you can just get 4% standing still, which is basically the same as the 4.5% that you can pick up now on your new cash ISAs and shared dealing account with IG. Shameless little plug there.
That's right. Just take us through how people get access to that.
Yes, so starting April the 1st, tied in line with the new tax year, if you have a share dealing account, a pension, an ISA, a physical equity portfolio with us, we're now paying 4.5%, of course in line with the Bank of England rate, on any uninvested cash up to 100 grand's worth.
So any cash sitting in my ISA account or in my stocks and shares account,
correct,
gets 4.5%.
You've got to have at least one investment. So you can own one share.
Okay.
It can't just be sat there in cash. You have to physically have something. That could be an investment in an ETF. It could be something in a smart portfolio. It could be Next. It could be any of these stocks that we're talking about.
Yeah.
So at least one investment, and then we'll pay you interest on your cash. We're like the kind of hybrid cash stocks and shares ISA that is flexible because you can pull the money out if you need to move it into your spread account, if you need to move it back into your ISA, move it over to the options account, whatever you need to do, you can do it with us.
I'm checking what my one pays because I'm sure it's like 3.
Yeah, it probably will be. Time to transfer it across.
I'm only getting 3%.
Oh, come on then. Let's go.
That's
Come
a
on,
50%.
Let's go.
Right. Boise asking, why did Rheinmetall get down to 950 yesterday? Because that's it. When there are 4 sellers and there are no buyers, then that's all the price is in these kind of markets.
I've got a chart for you, actually. Hang on one second. Let me find it. I've got a, no, it's not a chart. It was a sector breakdown of what moved in the Euro stocks yesterday. And if you can pop my chart up here. Oh, sorry, hang on a sec. I need to get this on the right screen. There's, I'm driving the train. There you go. Right, so utilities, insurers, chemicals, all at the bottom of the stocks yesterday.
Yeah.
So this is that defensive getting sold. I mean, yesterday they didn't quite buy the healthcare, the consumers. Europe didn't go on the offensive yesterday because of the timing of how everything kind of unfolded. That's exactly what you're seeing. So the defensive was sold off yesterday.
Yeah. Here's the GIP, the GIP of Rheinmetall yesterday. As you can see, the opening auction, puke, forced selling in that opening auction. And yeah, Boise, was that 950? Yes, it was.
It did get down.
Oh my gosh. 950. So you could have made 30% in 24 hours. 30% in 4 hours.
You could have done 10% on the NASDAQ yesterday from top to bottom.
Yeah.
That's the insane thing. We were looking at the, hourly candles that looked like weekly candles yesterday. It was ridiculous.
Yeah.
Just insane.
Right, quick 1 minute break. We'll come into 10 minutes of fast markets. Then we've got Matt Arbour joining us to give us an update on what on earth he saw yesterday afternoon and evening. Welcome to Fast Markets, the part of the show when we look at a couple of ideas of our own and then get some ideas into the chat there as well. Talking about the chat, we've got the poll result. Is he mad? Is the big orange man mad? Or is there a plan? 61% of you say there's a plan. And that's interesting because that's very much an international UK audience. So if you're in America, you would imagine the numbers are going to be even greater.
This ties in with what I've seen in the kind of fin-twit space. A lot of people are now moving towards this he has a plan kind of idea.
Yeah.
I actually worry, are we bouncing back too quickly? Because one of the things that I assume Basan wanted to do was obviously get the 10-year rate down so they can start to refinance their debt. It's bouncing back up pretty quickly.
Yeah, as it should. I mean,
as risk comes back on, but did they get enough time to do what they needed to do?
For fast markets, I reckon, actually, let's have a look at treasuries for once, because this does not make sense to me. Let's see if I can find that. Treasury 2-year note. Right, here is the 2-year over. When did we start all this mess? We knew it was April 2nd.
We kind of started to get it mid Feb was the top. That's when he started to really kind of ratchet up the rhetoric.
Okay, so but then it didn't really move. That's the normal kind of volatility for 2-year treasury.
Nothing, basically.
Yeah, nothing, right? This thing isn't meant to move because you're meant to have a fairly good idea what the plan of the Federal Reserve is over the next 12 to 18 months. 12 to 18 months is what a 2-year trades on, okay? It's what is the average of interest rates overnight for the next 2 years, and this gives you some kind of representation. You see there, 8 p.m., well, it'd be 9 p.m. on April the 2nd, we went from 103.60 up to 104.60. That is a huge move in a 2-year treasury. But it peaked on, yet again, when we saw, so remember, this is the inverse of interest rate expectations. So on Sunday night, we saw this panic that interest rates were going to drop, because that's money going into treasuries. You're coming out of equities, chart off, and your money's going into treasuries. Therefore, you'll take any yield you can get. So that's when the yield troughs and then starts to come up again. And again, it's distorted markets. You cannot take interest rate expectations when people are being forced into treasuries. That's why you've seen the move back as well, and rates have gone higher. Rate expectations have come higher, back into alignment with what Jerome Powell's telling you.
Yeah, but you just don't see vol like that in normal markets. You just don't see it. So
and with vol comes opportunity.
Correct. Yeah, correct. But the question was, do we think that they tend to swim in the kind of 10-year space? Well, this is in that interview that we saw with Basant, they were saying that the previous administration had actually borrowed a lot more money in that shorter dated space.
Yellow.
So when times are good, you should be, borrowing out in the longer term. Think about your mortgage. If you haven't got a mortgage, if you rent, right? Think about a mortgage. If you've got lower rates, you would try and borrow that money for as long a period of time. You want to try and fix it in for 5 years, right? When rates are high, like they are now, I've just done another 2-year deal in December because I want to get kind of through it and hopefully refinance at a better rate in a couple of years' time. So you don't, if times are good, you don't do short-term deals. So the fact they were borrowing so much in the short-term space doesn't make any sense. They need to try and find a way to refinance these short-term deals at longer duration. And so it's the 10 years really that people are looking at, because if you can get that down.
As chairperson of the Fed, Yellen was negligent. Lower rates in 2014 to 2018, negligent.
Have caused this problem.
They have caused this problem. Then as Treasury Secretary, she is causing this problem now for that short-term rollover. Why would you sell 2-year and 6-month debt at all-time lows. It just doesn't make any sense.
Doesn't make any sense.
And it's all the fault of Yellen because she made those decisions in both instances. Right, let's look at June, because June now I'm hearing a 98% chance of a rate cut. It's either 25 basis points or 50 basis points.
How's that changed? Is it easy for us to see how that's changed over time? This, by the way, if anyone hasn't used this tool, this is FedWatch. So if you go onto Google and you type in FedWatch and you get access to the tool, and it shows you in real time, near real time, what the Fed fund futures are speculating on where those rates are going to be. So when you see all the news articles and you see everyone talking about, right, the markets are pricing this, and you wonder where it comes from, this is exactly where it comes from.
So that's the key one there, right? 1st of April, a 25% chance of rates being unchanged, right? 25% chance of no rate cut. And now we are at a 2% chance of no rate cut in June, right? That's very telling. For December, even there's movement down here to 3%.
Yeah. And that's what, 3 cuts? No, where are we now?
Much more.
Much more. That's a whole percent, isn't it?
Yeah.
1%, 1.5%.
Well, yeah, to midpoint, yeah,
Midpoint.
1.25.
Yeah.
So 5 rate cuts, there's even a bid for. 4, 3, 2, 1.
Yeah. So that's the market telling you that this stress is real.
Yeah.
Which is why I probably heed caution on a bounce like today, because we haven't solved any of the trade disputes. We really haven't. We're getting good news, and this to me is a market that screams, I'm thirsty.
Japan on their way to the White House is pretty big.
That's one of however many nations are on it.
India have already said that they're negotiating, there's 50.
You're not getting
the only thing is China. China's the one that he's really going for because they're his biggest competitor in the world, right?
Well, we haven't got anything concrete yet we haven't got anything concrete on anybody apart from what he said last week. And I think that's my...
Well, even that's not concrete because it's got a 90-day clause in it.
Well, yeah, but it was written on a piece of paper and a board. So
not even a piece of paper.
It was a board, so it's pretty concrete if you ask me. They made the maths up, so that's what they put. It's about as concrete as you can get.
Right, we've got Mark Arbor outside. I want to leave you with the stock Trader's Almanac, right? This book is obviously written in November, October, November.
Yep.
Yesterday's quote of the day, Monday the 7th, the day that vol spiked at 36, the day that the market bottomed at 4,780 on the S&P. Letting your emotions override your plan or system is the biggest cause of failure. Fear and greed. Yeah.
Mic drop.
Well done, the Almanac.
Yeah, nice. Well timed. Right, so on that note, if you want to see more, what we're going to do, and we just want to ask everybody out there, our new channel has been up and running now for a whole week. Please like and subscribe at Trade Live IG. And I need to give you a double thumbs up now. Like and subscribe.
Yeah, this thing down here, where is it? There's a big thumbs up. It would be really useful if you would give us that. Yeah, support the channel. Let's get the voice out there because I think we cover this more fun than CNBC.
I'd like to think we're a bit more real. I'd like to think that it's we're not afraid to say if we get something wrong. We're not afraid to see and look at something in real time. And there is nowhere else where you can be on the chat and you can drive what we're talking about, and we can take the nick out of us.
And insult Ronnie.
Insult Ronnie. Yeah. Or Pete Ward.
Yeah, especially Pete Ward. Right, great. We're 2-minute break. We'll be back with Matt Arbor. Let's go.
See ya.
He's back yesterday. I found it very insightful. I found it very helpful. I hope all the viewers were the same. Can you come on every morning?
There's risk to be managed, Rich, I'm afraid.
There is risk.
Trading to be supported. But yeah, what a day yesterday. Wow.
What a day. Take us through the sort of different emotions at 9 a.m., midday, 3 p.m., and then into the close.
Well, I suppose the morning was interesting. The market, there were tentative rallies and we kept on coming back. There was definitely no confidence in the market through the morning. We were languishing off the lows, but had come off. Everyone sat there waiting for a US Open. Yeah. US cash opened, and it wasn't positive initially. Yeah, but trusting that first move on the Open, it's super volatile. The spreads are wider. It's probably not the best time to trade. But going into 3 o'clock, there was a better bid tone.
Yeah.
Things were looking healthy, but then all the fun started.
No, what do you mean? What was happening?
Well, it was quite funny because sat on the trading floor, we're there looking at the screen. Market's rammed. What's going on? Getting no news. There's no news on the major providers. Nothing coming through.
Let's just let's get the GIP up to. Sorry, showing the old.
But the linking on this is the humorous bit. Sat on desk. Raj, one of our traders, sat there. He's going, I just got a text from my dad saying that there's a 90-day suspension on tariffs. And none of us are there on the socials watching. Obviously, this is on Twitter somewhere. If you're following the right, go on Twitter. Right. We're hearing it from a text from a guy's dad.
And what does that
well, he claims he's not Donald Trump's mate, but who knows? That's the first we're hearing the news, and that's the news that's driving it. It's very easy, particularly of men of our age, to knock being on the socials. I know you're a big fan. I'm not. But this is what the market is moving on. Yeah. The algos are picking up that, and bang, that's why we've seen the market goes. Everyone's scrabbling to be on top of buy the rumor.
And so take us through what happens when that tweet goes out, right? Who is scanning Twitter for that kind of stuff?
Well, for the past year, this is what. If you are a low latency trader, this is where you have to be, because
That's all, thanks.
Yeah, that's what's driving the market. So what's happening on those? I presume the first thing that happens if you're a citadel, you're pulling your liquidity out. You see this, bang, you come out the market. You've got no interest until waiting. Come in at the wider spreads, clean things up on the wider spreads, but keeping the spreads tight, there's no interest there. So you pull some liquidity out the market, try and let the market stabilise. That's why we see these kind of gaps and the scramble.
Right.
Everyone's putting in an at-market order going through, and it layers on top, cleans out whatever's there.
And stops.
Well, if there's stops on the top side, yeah, they're obviously coming out. Everything's being triggered. That's, the move we saw in the DAX was, and, don't like to be anti-European. The German market makers are particularly poor. You might notice it. You might shout at your screens on a Monday morning as to why can't I see a DAX option?
Right.
This isn't an IG thing. This is the market makers in Germany are very, very cautious of sticking up their DAX pricing on DAX options. They like to wait to see a good 10 minutes of the cash open before they put anything up.
Put their head above the parapet.
But then yesterday, so
It's the DAX chart, guys.
the moves happening, and again, you're not facing that on our platform. DAX spreads in the market were 40, 50 points wide into that move. So yes, the market's moved 1,000 points. We're facing, if you want to trade the underlying those DAX futures, you're paying 40 or 50 points.
Yeah.
So this,
because there was always the risk of that headline.
well, because no one knows what's going on. It's that uncertainty. Like there's obviously some news out there. What's the news? Verify the news. Nothing's verified. That's why we're not seeing it come through on a Bloomberg or on a Reuters. They won't publish the unverified stuff.
True. CNBC, literally the anchor had to decide whether he was going to go with the story or not, because they were saying to him, right, we've got one source, we need another. Okay, second source, go for it. He goes, okay, I think we can go with this, but this is what we're hearing.
But of course, then they're the first report. They've got the pros on the phone to the guy who the tweet's attributed to.
Yeah.
They get the denials. So it's the two sources you've got to be on top of. But I suppose the rolling back, and we were talking yesterday about similar markets. I alluded rightly or wrongly to September the 11th, and there being no bids in the market then. As I'd seen the market going in sort of Friday afternoon, there were no buyers, no buy orders really out there. I think with these aggressive rallies, putting COVID to one side, which was just strange around, we're looking at 2008, where we weren't talking about social media. Everything was about what central banks were doing, and the markets, very soft markets, were on tenterhooks because you were getting surprise emergency rate cuts.
And this was always happening at 1:10. So you would be staring at your screen at 9 minutes past 1. And sometimes it would be 12 minutes past. But if it was, we had a rule at the hedge fund, if it was red and fed, then you don't even read the rest of the story, you buy it, because that was a rate cut, liquidity injection, saving AIG, whatever it was.
Well, completely. But the last time I think I saw those sort of crazed, really sharp up moves were that 2008, where they were happening quite a lot. The concept of FTSE down 300, finishing the day unchanged moves that we were seeing through those. But they weren't on tweets; they were on central bank announcements. So I suppose it's those dynamics of the market have really shifted.
Yeah. So how do you manage risk in that environment? Do you just have smaller positions and bigger stops, or?
Well, the smaller positions tend to be the key. That's it. When you're facing moves 3 or 4 times, intraday moves 3 or 4 times what you normally see. You don't, do you want to carry more risk into those kind of moves? It's a function. It's a function of the volatility. Is it prudent? Is it prudent to do that? Probably not. No one can pick bottoms. No one can pick tops. And when your bottom, when your bottom's disappearing by 3 or 4%, it's scary stuff, and it's. Don't go all in at once in these kind of markets. Yes, there's going to be the time when you did hit the bottom of the move and you didn't fully load up. But that concept of being able to average in again, don't just do it because it went wrong. If this is your conviction play, that's where the opportunity is, and the averaging in.
It's all about surviving, because there will be much easier times to make money, right?
Yeah.
And if we have a look at vol here. So here's let me see if I can just get that a bit zoomed in. So originally Sunday night, right? And then we stuck around that 33 level for a while. Then you see the US Open, and we peaked at 33. And then there was aggressive selling of volatility down to the 31 handle, which is a big enough move in itself, isn't it? 33 to 31.
Yeah, on the VIX, which is no fun until it's all the fun.
Yeah, jeez. And then 31 to 25.5. I mean, what chance do you have? That's incredible. But why when it was denied, Matt, what happens? Why don't we go back up to that 31
You're
level?
looking at old dates here, Rich. I don't know if you know that.
Oh, well, yeah, I've just taken it. There we go.
Okay.
So why don't we go back up to above 30? What happened from that tweet over the rest of the day to have us at 28 now?
It's often what you see with it, that in that sort of strange way, an up move is accredited with much less import than the down move onto the VIX. So even though there might be the volatility onto the upside, and what we saw yesterday, and sort of people have been talking about it, the spike risk, the gap risk at the moment is to the upside on a Trump rolling back or something fundamental happening that changes the dynamics. I'm not entirely sure myself why a 90-day hiatus would change the dynamic. It's what's happening in those 90 days, but a rollback, something to give confidence that this isn't, a cold winter coming on for tariffs is what the market's looking for. We've seen downside again. Keep on saying it. This was nothing new, that people knew this was happening. The tariffs. It's just that a line has been held, and Trump's not for turning now, and that has put fear into the markets. But how much downside is there just on the tariffs being in place? Yes, there's downside on recession, but those aren't quick moves. Recession moves are slow, gradual.
Which is a vol of 25.
Exactly.
Yeah.
Exactly. It's the uncertainty that drives the VIX, but it's generally downside uncertainty rather than upside uncertainty. But it's one of those instruments to trade that you're often left scratching your head as to.
Jeez, yeah. But then generally as well, if I'm holding a load of risk from 5,600, 5,400, my stop, everybody's pain point was roughly the same, wasn't it? 4,800 to 4,900, that horrible feeling of those big red numbers on the screen, and the sort of panic mode. If you've been flushed out, if you were going to be flushed out, you've been flushed out. Which meaning you've got new people putting on risk that is from 4,900 upwards. So they're in profit. So they don't panic the same, even if we get back down to 4,850, do they? Because they're flat P&L.
Okay, yeah, I suppose it's that rolling on effect, but it's very much when we see these moves, the levels when you take out the position, these are so far away that you can't conceive, and 2 trading sessions you're there.
Yeah.
That's
yeah, that was mine.
And this is so your mind is processing. Well, hold on, another 2 days. What does that look like? Anything's possible, even though part of you knows, no, it's not actually possible. Is this a story that makes the market fall 20% in 4 days, whatever you're looking at? No, it's not. But now I know it could happen again. Yeah, and it's very easy to forget. Like COVID, one off. Can't happen. 2008. Oh, it's
never again.
All these black swans. No one uses the term black swan anymore, and I always found it funny that black swan. I keep on hearing the black swan event. I went to the Wetlands Centre in Barnes. Black swans everywhere. Anyone who's been to Western Australia, black swans everywhere. No way. And it's like I said to the guy, I said, "Wow, you must be really lucky. You've got all these black swans." He goes, "No, they're really common." I was devastated.
Yeah, just everything you had been taught.
Yeah, just black swan event, but black swan events do happen quite often.
Yeah, we need a new black swan.
A new black swan.
Have you seen any smart trades come through that you sort of step back and go, I get what they're trying to do there?
Well, it's less. I suppose it's less the smart trades. As I was saying yesterday, that there were lots of moves that were overdone that are not necessarily tariff affected, and I think still there's a lot of noise in the market around some of these stocks. And I don't know, looking at a stock that was an odd one to look at. It's only because I hold it for age. Like it's SSE, UK utility, and the up move we saw in defensive UK stocks was as overdone as any downwards move. And we've seen actually those defensive moves come off even more of a reversal than the negative moves on the stocks that were in play, which is say some really strange market dynamics going on.
It's got to be algos, right?
Yeah.
Nobody at home is sitting thinking, "Oh, I'll buy SSE here." Nobody, sitting at a hedge fund that's making decisions thinks. And there's the chart there of SSE on the.
Yeah, so it's on. What's it on?
That.
Look, and this is a mundane utility. There's no tariffs here.
With crappy numbers, certainly.
It's a very strange. But these kind of FTSE 100 stocks caught in a crossfire. And I suppose this is a different one because it was a rally. It was the only things up in the UK market on Friday were the utilities, but they were up loads as. Whatever the defensive stock. What do I know as a defensive stock? I can't go into tobacco was the same. Saw great runs up on BAT and IMT. It's a sit back now, and Rolls-Royce being a classic. Everyone likes trading Rolls-Royce. The volatility's good. Everyone remembers it from the fun they had when it was at 90p, 70p. Those little runs. So people like trading it still. Sit back was £8. Which we were hitting a week ago. Was that the right price on defence spending? We've seen a lot of volatility sitting at 680, maybe £7 this morning.
664.
Okay. Yeah. It's tough to keep track.
I know.
What was the right move here? Is defence still the game? Like, are Europe going to stand by what they said with regards to defence spending? And in tariffs, of course, you're not buying any US manufacturers, certainly. Like, are these stocks oversold, or did the market just get overexcited? And that's something you can only make the decisions about yourself. But there has been irrationality. Like, both moves were perhaps overdone.
And something, gold holds true about that as well, because not just the actual the fundamentals of it itself, but the way people think now, SSE, gold, you've got to think it relative to an Nvidia and relative to a Nasdaq, because suddenly if you price gold in terms of Nasdaq, then gold starts to look really expensive relative to where it was 3 months ago.
Yeah, and gold is difficult to price. Everyone can sit back and look at history and go, well, of course, Nvidia was ridiculous trading on a PE of whatever it is. I'm not going to pretend to know the PE on Nvidia, but there, it's one of those. You can see why that came off, and why was everyone getting so carried away. But again, there are instances of Tesla supported that high PE, and the share price kept on going up. It's difficult. It's the kind of decision that and that's what makes it interesting for all of us. There is no right answer here. You have the story, you have the same information technically as anyone else. And in moves like this, where this is not being driven by value pickers or analysts or anything. This is being driven by algorithms and liquidity. And fear. And so there are opportunities. So keep on saying it. Go with those stocks which you've been looking at for a long time. Maybe they've been on your radar. You've not touched them because you don't like the PE. Reassess it under the lines of, yes, we could be heading to recession. No, what effect does that have? What's still going to sell? What's still out there? And there will be opportunities there that the market's not picking up, because the market's moving in these broad-based algorithm generated baskets. Exactly.
Yeah. So keep it small, keep it nimble, and be able to react to something like a Rolls-Royce down 11%. An IAG up an IAG up 7% this morning. Luke highlighted it. Now only up 4.2. So an SSE at 17 quid, now at 14.80 or whatever.
Yeah, it's and I suppose the other end of that is classic pairs trading. If prices have all moved in a basket, you're going to everything moving in lockstep. That pair trade becomes, that powerful trade. The HSBC has a huge move, much bigger move. Those Asian banks, rightly bigger moves than other UK banks, but that is there a pairs trade there? You know, maybe that's the right direction. The sell HSBC, buy Barclays, or buy a US bank.
Yeah.
You know, the US banks came off really heavily. What do you believe in the dollar system? Is JP Morgan down 10%? Is that the right reaction, or has this just been caught up in the move? But pick your winners. If you're being cautious, run the pair, run a 2-for-1 pair, you know, however you play it, but hedge some of it with the weaker player or your perceived weaker player, and so you don't get caught out so badly in those big sector moves.
True. Yeah, great. That's great advice. Yeah, looking for things that have moved at correlation 1.
Yeah,
but there's a clear beneficial.
There's a different story other than because no one's thinking about that. It's Asian banks, sell them all. Yeah, that's the story. US banks, the whole sector, there are winners there. And when you see these big moves, there's a winner and a loser likely. They weren't moving 1-for-1 before. They've moved 1-for-1 in the big move. So that's perhaps where you're going to find the opportunities.
The one I saw in oil world was, of course, Occidental. Now, we know what, sorry, my computer's gone a bit slow. We know what Buffett's been doing. We don't know what his plan is with this thing. But if it was as down as often or as much as everything else, you know there's a guy with 350 billion.
He's sitting on a lot of cash, yes.
Yeah.
And these are the moves that he lives for. You know, if you bide your time, you get these moves. You know, again, you go back to 2008, the banking crisis. Of course, Bank of America was too cheap. Of course, JP Morgan was too. You know, these things. I saw someone on the chat before referencing Barclays at 30p. You know, with the existential threat. But these, you know, the too big to fails. You're going to collapse in upon yourself. I think at the same time, Rio Tinto was another one. Like, was Rio really going to collapse under the weight of its own debt?
50, I think.
Yeah, it was, but the whole story was this could be worth zero next week if you call in all the debts. Those kind of things. And it's step back. Like, am I going to get caught up in the panic, or am I going to get caught up in in this what you believe, and what would actually happen? How does this actually play out in reality in some of these sort of systemic things?
You can't think logically when you're panicked about a P&L.
Yeah.
And so if you are sitting on the sidelines and you've got that cash and the ability to think logically, my God, you're in a strong position right now.
Yeah. Because these moves don't happen that often. Maybe they'll happen more often. You know, who knows what else Trump has to do. But they don't. Big moves like we've seen. These are, again, black swans as the flock flies over your head. But they're certainly not frequent, and it's where the opportunities tend to come from.
Somebody said yesterday it's an orange swan event.
An orange swan. Well, yes, totally.
Matt, thank you as ever. Absolutely fantastic, really useful stuff. We're going to take a quick break. We'll be back for the US Open. What are we going to see this morning? Join us soon. Well, here we go. It is time for some all sessions action in 20 seconds time. I will come to your comments after that because, as you can see, I'm here by myself. So it's the perfect time to go through all those comments. Kate Murphy, welcome. Thank you so much for your additional chats there. Welcome to the show, one of my good friends, and also in Queenstown, New Zealand. We're straight off. Up and running there with Broadcom up 3.5%. That's on the back of the $10 billion buyback they announced yesterday. Amex bouncing 4, Wells Fargo, Palantir back above the $80 level. I saw this at 71 yesterday, and now we're trading at 81. These are some big marks up. Nvidia back above $100. Have you picked up any of these bargains, people? Because these have been quite extraordinary. I'd almost be tempted to short Nvidia there, just because, and that's only because I've got options positions, and I had options positions at $93 yesterday, and that is a real bounce back. So is the $100 level going to hold? I'm not sure it does, because you've got people with a lot of pain. They've still got pain from Friday's session and Monday's. You give them an out now, right? You give them an opportunity like $100 Nvidia. I think they might take it. Just as we say that, it goes through $100 on the downside. Boeing 142. That one's been smashed recently as well. Goldman's, you see, up 2.7. Tesla, boy, oh boy. Dan Ives, how can you get a stock down 10% when somebody cuts their target price to $350? At one point yesterday, it still had about 40% upside. Absolutely bizarre on those algos. All they do is they see the downgraded price and they smash it. $57 on Nike. Oh boy, am I glad to see that back up there. That is, of course, my biggest position on the Tasty platform. I'm short the $60 puts, the $65 puts, and I'm still holding because I believe in the company. I believe in the turnaround story, and I believe in Vietnam negotiations. What else are we seeing here? Eli Lilly up to. Now, that's an interesting one. Are people still keen to lose weight? I know I am. I actually was having a discussion last week with somebody on the Novo Nordisk program, taking these appetite suppressants. It's tempting. I'm not one to buy into these things, but I think I'll stick with coffee in the morning as an appetite suppressant. But if you've been waiting for a chance to get into Eli Lilly, you believe in the story, I don't know, 739, interesting kind of level. Walt Disney, Pete Ward at Euro Disney just now. I'm getting all the updates. Some beautiful pictures of him and the family, I have to admit. One of them I've got to get up on screen. $85. Got down to 82, I think, at one point yesterday. I don't have an open position on Walt Disney, but that is one I'm watching for. As you can tell, I'm thinking of these brands, right? These strong brands that have survived for 50, 60, 70 years, 100 years. Do the next 3 years crush American brands? And does Trump ruin American exceptionalism forever? Or, as 61% of our viewers thought this morning, there is a plan. All we need to do is get through the next 6 to 9 months. And, you know, will people still go to Disney? $85 is your opportunity there. And I'm talking about, you know, longer term investments here, right? We've all got another 20 grand window to put in our ISA. That might be £500 a month that you put in, might be £200 a month. But the opportunity to make these investments, you know, do you now sow the seeds of your future wealth with this sell-off? That's up to you to decide, but there's certainly opportunities being granted Alphabet at 16 times earnings. That's it, 16 times earnings. The S&P 500 is at 20 times earnings, maybe 19. Alphabet, Google at 16 times earnings because nobody believes in search anymore. Interesting. Will AI ruin Google for the foreseeable future? If you don't believe so, then 16 times earnings is of interest. Apple 183. There was a great post in the FT this morning that showed you the changes in the prices. So an iPhone that previously cost $1,000, now $1,300. Then there was the EarPods cost you, I think, £250 or $250, now over $320. You know, big moves down to these Chinese tariffs. What else do we have that jumps out? Netflix, 870. I have tried to cancel that Netflix. I just can't do it. I was £19 a month at one stage, and I said, right, that's it. I'm out. And I was like Trump with his tariffs. I was waiting for the negotiation. I knew I wanted it, but I just didn't want to pay very much for it. I got them down to £12 and I took it. So, you know, do a lot more people do that? Do they push back against Netflix price increases, or do enough people just not care? Stock down from over $1,000 to $880. McDonald's has hardly budged, $305 when people thought it had E. coli. Then it was at $295. So McDonald's doesn't care about tariffs. One thing that does is Starbucks. Starbucks, I've got a short on at the moment. Good friend of mine, Dipesh, thinks that it could be down as much as 30% on bad earnings over the next 2 quarters. We've already had a 15% move down in Starbucks, so I'm watching that one for the positions I've got there. Now, I wonder if we can get, let's just take chart off for a second, please, guys. And let's see if I can get my positions up and run you through those on the Tasty platform. Here we go. Right. So, chart up, portfolio as a whole. See if we can zoom in on that a little bit. You can see now I am sitting on $230 of delta. Right, 230. I think that was up at 500 at one point yesterday. But the big spike up at 2 o'clock, I took that opportunity to get out of some Tesla, right? Because I'd seen it at $215. It rallied up to 230. Managed to get out of some delta there. You can see though, by stock, I'm still a little bit more lower deltas in each one. So Nike, you can see I am long $62. Upstart, God, is Upstart my second biggest position? That's a worry. That one, a nice rally yesterday, but I'm short, just very simply short the 41 puts there. But yeah, that's a pretty small position relative. It's, if you look at it, worst case scenario, I'm buying 300 shares of Upstart at 41 bucks, $12,000. It's not going to break the bank. Famous last words. Then we've got spiders. What am I doing in the spiders at the moment? A little bit messy. I've got a 571, 540, 520 butterfly on. Now, butterfly we haven't been through yet in market measures, but it's an interesting one. There's no risk other than P&L, because I am going short the market at 571, right? Essentially, I am going long at 540, and then I'm going back to flat again at 520. So think of it like a pyramid payoff. So my peak profit on April the 17th, which is now 9 days away, is at about, well, $540 on the SPY, It's currently at 512. So I'm playing for about a 4% rally there. 4% rally until next Friday would be my absolute peak there in the butterfly. But you can see it's priced at 64 minus 2 times 35, right? So I'm on a credit of $6, but then I've got to pay 23. So that's getting priced at about 16 bucks just now. 16 bucks. If it rallies up to 540, then I get 571 minus 40. So a nice 30, chunky 31 of profit there. And of course, that profit's being eroded all the way down to 520. Elsewhere, NVIDIA, very simple. I'm short the 100 puts, right? So I've got long delta there. I'm short the 85 puts. I've got long delta there. That adds up to 33 plus 37. But I am short the 110 calls for May. I don't think NVIDIA can aggressively rally back before their next set of numbers. So I'm short the May calls there at 110. That takes out half my delta, so I end up net long 29. Freeport McMoran, oh boy, I got this one wrong. So I'm short 2 of the 39 puts, 2 of the 31 puts, and the stock's trading at 30, well, now 31.30. So trying to get back some of the money there. I'm also short the 46 calls. PWR, it's a bit dull. I'm short the puts at the 240 level, stocks at 245. Deckers, short 2 of the 110 puts, 2 of the 140 calls. Quite a simple one there. Took a lot of pain on that. Then short 20 of the 70 puts on Palantir. That's paid off quite nicely. Eli Lilly, I've still got my 840, 980 call ratio, miles away from that. And then Starbucks, you can see the position I've got on that is long of the 85 puts, right? So I'm short at 85. Then I'm covering at $70. So I'm long a put spread 85 to 70. But then I don't think it goes too far below 70. So I was happy to sell a May 70 put there when the stock dropped down to $78. And I'm also short the 120 calls. That's it. That's the Tasty portfolio update. We are going to go on to a chat with Martin Harris now. So, sorry, Tom Wolstenholme coming in to join us. We'll go through your comments there on the chat with Tom, because I'd far rather chat to you guys than hear what Tom's got to say. See you shortly.
Good morning. Welcome to Tom's Cool Little Tools with me and Rich. Rich is exhausted. He is exhausted. So we're going to have to...
Great sleep last night, though.
Yeah?
It's only from talking so much, because usually I got Angeline coming in here and I go out to Cannon Street, have a nice coffee at 9 a.m, watch all the people that are just arriving from work.
Yeah.
But
now you've got to push through.
Yeah.
And you've got to do
Angeline's
almost
on
a
the ski
full...
slopes.
You've got to do almost a full day's work like the rest of us. Rather than 7 till 9. Or
3 hours work.
Right?
Yeah.
Ridiculous. Retirement, what a wonderful thing.
How's your little if that's the way we're going to play this, Wilson at home. Tell me about your little tool.
Nice calm atmosphere today.
Right, yeah.
It's been hectic enough.
Woosah.
Let's get on.
Well, you say that, but the market is selling off. We've had a move down already. Well, look, this is not big, but the S&P moving down from 51.50 to 51.30. What's that?
Given what we've seen, it's a walk in the park, isn't it?
Talk about a walk in. Here we have producer Phil bringing me in a coffee. I don't know why we've gone to full chart. We could have had producer Phil in for the first time. There he is. New Fred.
On screen
New
debut.
Fred there. Good stuff. Thank you very much, Phil. Tom, take us through your thoughts and actions, because you've been active in the market, I hear.
I was active yesterday, yeah. A little bit. I was watching it all play out. It was.
How did you learn how to trade?
Well, no one really knows today. You just kind of mess around. But look, it was interesting, wasn't it? 8 a.m. till 9 a.m.
Yeah.
It was like our time. It was like the world's blown up, wasn't it? Mm-hmm. All very interesting. All sessions opens, and it's still pretty bad. But in my opinion, RSI is always your friend.
Right.
Do you use it a lot, or do you not use it a lot?
I mean, I don't believe in technical indicators, so...
This one, for me, it just seems to be critical, I think. So, for example, 9 a.m, all sessions opens, everything is oversold. Everything, right? All your big tech stocks,
right?
It's all oversold.
Have you got a chart of this?
Yeah, let's have a look.
Go on,
so why don't I bring up something like... Up. So if I bring up... Meta's a good example from yesterday.
Okay.
So if I go Meta...
Yeah, I don't talk about Meta enough, actually. I never trade this thing. Apart from when it was at $98, which was insane. I was in Medellin at the time.
Medellin.
Oh,
really?
¿Tú hablas español?
In Colombia?
Sí.
It was Medellin.
Medellin.
Is there a J? Okay. All right. Agreed.
It's double L.
Okay. Fine.
Medellin.
So if we're looking at Meta, this is yesterday. We're looking at, okay, so this is Friday. So that's the close on Friday.
Yeah.
And this is the open here. It's immediately oversold, right? And you can see it's oversold by this green line here.
Can we get rid of the bit at the bottom so you can see the RSI more?
You're very demanding, aren't you?
Lose the volume.
Let me lose the volume. Volume is interesting as well, but all right, we'll kill volume for now. So we can see here.
Yeah, expand that RSI up. Go on.
Let's move this up.
There, perfect.
Then it looks even more dramatic, doesn't it?
Yeah, because that's all we're interested in here.
Thank God you're here to kind of help me show the view nicely. Anyway, so we've got Friday here, 9 p.m. That was the close, and then we've got Monday, which was yesterday, 9 a.m.
Yeah.
All sessions open, so the pre-market's open.
Where did we hit the low?
So here, immediately, it's oversold.
And what is that number?
That is 21. So,
wow.
So we normally say 30 is oversold. We normally say 70 is overbought. Mm-hmm. So this has hit 21 immediately. So.
And what's your setups here? Because there's, as in, is it the 1 hour moving average? Is it the, what's the? Because
obviously the RSI will change depending on what view you're on. I mean, I think you use both. Because if you were looking at the daily at the time, the daily was oversold as well.
Yeah. But what's on the top left-hand corner of the RSI? It should have numbers on it, doesn't it?
Oh, I see. Yeah. Yes. Okay.
What are you actually using?
So I've stuck with the defaults. This is 14, so 14 days. So it's, yeah, right.
Period 14 at 70.30. Got you. Okay, perfect.
That's the default. I've never changed it. I trust J. Wells Wilder, the creator of RSI.
Good knowledge.
I know, right? He came up with this such a long time ago, was it 1970s, I think, for commodities. But this, I've just found, look, I imagine all the hedge funds, the big players, are all using RSI as an indicator. No?
It's very basic.
Very basic, but it always seems to play out as if stuff goes oversold, it comes back round pretty quick.
Well, no, because if this stayed at the low, right? If this what's the low there on Meta, where your cursor is?
As in the price of Meta at this point?
Yeah.
47, so 476.
476. So if it was still at 476 next week, the RSI would go up.
Well, it's a momentum thing, right? It's the magnitude of price change over time.
So if something's unchanged, then next week it's not a buy anymore. This is why technical analysis bull.
But the RSI wouldn't be under 30 at that point.
Exactly. The RSI would be 50 and the stock would still be at 476. So it's a buy now,
Yeah.
but at the same level, it's not a buy in a week's time. Doesn't make sense.
It does on a short-term intraday trade.
Agreed. If you're talking about the panic zone, then, you know, evidently it worked well.
It worked well, very well yesterday because in a moment of everyone is overselling, it highlights the opportunity. I don't know how couth it is to show your trades from the day before.
Oh, come on.
But look, it's just a sea. It's just a
Zoom in then.
It's just a sea of.
I can't wait for this.
What do you think of this? So
I still can't see it. Why don't you zoom in so people can actually read stuff? There we go.
God, you're in not a very good mood today, are you? This is why we're not allowed to do the show together anymore.
Right, so you bought Glencore, you bought Google, you bought IAG, Barclays. Mate, that is absolutely, you have nailed that.
And it was all because there was
And short vol.
and short vol because vol was at 33, so I thought that's got to come down.
Oh, hang on, what time though?
This was all around. That's the close position time. This was all opening around kind of 10.
Oh, this is when you closed it.
That's when I closed them.
Oh, Tom Wilson home. I take back everything I've ever said about you.
And about RSI.
So, no. So the market pumped because of fake news, and you took that opportunity to get out of everything and take your money.
Yeah.
That is impressive work. That is very impressive. Well done.
And it goes to show, doesn't it?
And when did you buy them?
These positions, I opened these positions at about 10.50.
Brilliant.
So everything was oversold at 10.50,
Yeah.
and it all started coming back.
And that was from the RSI
Yeah.
between 9 and 10.
The RSI at that point was everything is oversold.
Right, let's hear who did better than Tom. Right, that's the new name in the segment. Who's better than Tom? Get down on your chat.
Got a massive page to fill.
In the chat here, let us know what was your best trade from yesterday. I cannot wait to hear it. To be honest, I don't think I've got one.
Don't think you've got one.
I don't think I've got a great trade.
Well, it depends how deep you are going into it, doesn't it? Right? Because like if you've got loads of open positions going into something like yesterday, you're so limited by what you can do. Whereas I didn't. Right? It was all.
And that is the great thing of having being small and nimble, but also having low risk. As soon as that VIX goes through 25, I wish I'd taken everything off, which is my rule going back 15 years.
Yeah.
That gives you. Andrew McKell was saying, Tom, well done. Is it a dummy account? I think you mean a demo account, Andrew, not a dummy account.
Yeah, I didn't have the cojones to do it with.
You just showing me a demo account.
I was hoping no one would answer that. Would ask that, and we could just taken it because I never had to either way.
I have literally just said to everybody, I take it back, everything I say about you, and congratulated you and made you look like a god in front of your wife on television.
And I'm going to cut that bit out.
Yeah.
And I'm going to sell it as an NFT.
Yeah. Okay, good. So
then the other thing,
right.
the other thing I was thinking was, because the other big question, isn't it, is are stocks at a discount right now? I think that's kind of the big question.
for longer term investing,
For longer term investing.
agreed. That is big.
And I saw a lot of good charts in the FT today that said basically they're still not cheap because it looked at like forward PE over the past 10 years, and it was basically saying that ultimately.
Oh, in America.
In America.
No, UK is very, very different. FTSE was already on a discount, and now, some of the moves yesterday are just mind-blowing. America, well, this is the thing. What's the real earnings number, right? So earnings estimates $275, right? What does all this
$275 is what is a
EPS for the S&P 500?
okay.
So they say, right, Meta contributes $1 to the EPS of the whole index. Nvidia, $1. McDonald's, 50 cents, you know, and they add them all up.
Yep.
And they say, right, the earnings of all 500 companies added together equal $275.
And this is earnings that have happened already, or forecast earnings.
Forecast earnings.
Forecast earnings, okay.
Forward. So the actual number was 240 for 2024. Now, Goldman's slashing forecasts. Yardeni slashing forecasts. Everybody's saying, okay, our forecast was 275. Now it's more like 260.
Because of tariffs and because of impact on earnings for all these companies, right?
Exactly. And what's it cost for, just all this mess, the economic slowdown. Now, if we take the index, which is now 5118, and divide it by that 260 number, the market's on 19.7 times. Right? 19.7 times. That is bloody close to the long run average of 18, low 18s.
Over the past number of years, right?
Yeah, you know, as soon as tech became a bigger part of the index. Now that starts to get interesting, but what's the real number? Now for me, the real number is $245 of earnings. So 5118 divided by 245, I still see another 5% of cuts to come in, then you're on 21 times earnings.
Okay. And at that point, that's above average, which means that it's still expensive.
Still a little bit extended, yeah. 21 in the US, we must be down to 13 times earnings in the FTSE now.
So you would argue you're getting a better price in the FTSE than you are in the kind of inflated US.
Well, it depends what your growth is. So you don't have any AI companies in the FTSE, obviously. But is AI going to be 50% earnings growth every year for the next 4 years? That's the tricky thing.
Sure. I mean, when yesterday happened, big shock. What, 10% down over 2 days?
Yeah.
Which is quite a large move.
15% over 3 days.
15% over 3 days.
Biggest move since 1987. Had we closed where we opened yesterday?
Had we closed, which we didn't. Yeah. Okay.
Yeah.
So, for example, I took that as a good opportunity to move some cash into investments yesterday morning.
In the real world.
In the real world.
Tell me more.
Not on my demo account. So I thought, even if we're going to see further falls, it's like a 15% discount sale, isn't it? Well, that's the way I thought about it. So yeah, I moved some money from cash into real investments, not demo investments.
See, that's what you should have led with.
Yeah, but we're covering it now.
Yeah. Okay. See, it's like a shit sandwich.
Like a shit sandwich. But as you said, I think you've probably said this before. But what's interesting is it really does just take one tweet, and then we're off on another kind of crazy little downward spiral.
So how do you go about moving money into investments?
So I have a number of ETFs that I quite like, actively managed ones.
Okay.
They're JP Morgan ones, and their returns are typically reasonable. So you've got actively managed, you've got someone actually picking the stocks that go into it, rather than S&P 500 where it's just a representation of the largest market caps. That's what I do.
And that's in an ISA or a wrapper or a SIP or?
That's in an ISA. But then obviously, it's a mixture. It's a mixture. New tax year now, so we can start putting into this New Year's.
So this my girlfriend last night obviously came home, told her all the war stories of yesterday. You know, margin calls and having to go through 2 hours sleep, all this kind of thing. She said, "Oh yes, I took my ISA money and put it in the market yesterday." I was like, "Oh, what time did you get it before the big rally?" "Oh yes, 10 o'clock in the morning."
Perfect timing.
Took her whole ISA pot straight into the market, 10 a.m. yesterday, up 4% already.
Yeah.
And she said, "Oh, I'm angry. I'm only up 4%.
Yeah. I know. And I think My wife's the same, and I think she does almost nothing and always does really well. And I think it's maybe the mentality of men versus women. I don't know. What do you think? 100% of those surveyed, your wife and my wife,
Yeah, did better.
makes better strategic decisions over time.
Oh yeah. Oh no, that's definitely. I agree with that one for sure. Good. Right. What have we got on the chat then? Let's see. So Bigger Biaz, 2 XPX call options bought at 1.5, sold at 52. Boom. That is a mic drop. Bigger Biaz. That is going to be a hard one to beat. A 0 DTE 5300. So, and let's just remember, you sold it and it finished worthless. So you sold it for 52 and it was actually worthless.
Yeah.
Well done, sir. That is really, it's not an accident. You did it. Not an accident. You got to take credit for that. James Bennett, no such thing as oversold or overbought in crisis markets. I've seen RSIs go down to 10. I was going to say I've seen 8 before. And even one after the Euro Swissy depegging. Yeah, that's a special situation. Right.
There was also a poll in there. I don't know if you want to. I think you skipped straight past that, didn't you?
That was
50-50.
before you announced that it was a dummy account.
Well, people can still vote, I think. So it's, the results stand. We're on 50-50.
Martin did say, should we retake the poll now?
Also, you've got to admire my honesty. I could have just lied, but I didn't. You know, it's all about.
I mean, we take that for granted. We truly hope that you come on here and don't, make things up.
Well, I'm proven. Anyway, what else we got?
Right. So Martin saying, the daily ETFs. Be careful on the ETFs with the 3x and stuff like that.
The leverage ETFs, yeah.
Leverage ETFs are for short-term trading only. Whatever you do, do not invest in a leveraged ETF because it's the daily rollover costs you a big amount.
Because you're technically borrowing money, aren't you? Because if you're on leverage, you're putting down a margin, so you're paying funding.
Exactly. Yeah, exactly. Which has to be take off each evening. However, in markets like this, it has to be said they've got their place in the world because you see Nvidia at 93, and if your conviction's huge, but your capital is small, i.e., I've got $10,000 sitting in my stocks and shares account. I want some proper leverage into Nvidia in the short term. Mm-hmm. Then if you've got very high conviction, it has its place. Right?
Yeah. Well, why would you use an ETF for a single stock?
Because if I'm investing in the stock and I invest $10,000, whatever, then I get 106 shares.
Mm-hmm. Good math.
But if I leverage ETF it, then I've got 318 shares. Yeah,
but you could just do a leverage trade on the individual stock.
Not in a stocks and shares account.
Right, that's the difference.
I'm talking about people who's sitting with a stocks and shares, and they don't go into leverage generally.
Okay, and it's an easy, accessible way to have leverage, isn't it? Because you can do it in the same way as your other ETFs.
Very dangerous if you don't know what you're doing. So please don't go and jump into leverage ETFs without doing hours of work on it, and do not hold it for longer than a week. I'm kind of fingering there a little bit there, but I never hold these for longer than 3 days.
You want to know your funding charges ahead of the trade because you want to know exactly every day, this is how much I'm being charged to hold this position.
Yeah, that's it. Wonderful. Right, Tom, give us any more golden nuggets that you've got before you take your tools back to your desk.
Well, how long we got? We got a couple of minutes?
Yeah, we'll give you a couple of minutes.
So there's one thing I quite like. If we can bring up my screen, this is the TradingView ETF screener. And one thing that I think, so at the moment, if we look at these ETFs here and we look at their holdings, as we know in these ETFs, the top 10 stocks in your typical S&P 500 ETF is somewhere around 35%.
A little bit more of a zoom if we can.
Oh, the Zoom police are out again.
Look at that. That's it. Well, you and Ange are terrible at zooming.
Thank you. So something like this at the moment, you can see that the top 10 stocks in that ETF are a large proportion of that ETF, right? And a time like at the moment, something I think is quite useful is if you look at equal weight ETFs.
Yeah, this, I mean, sorry, we were talking about this back in December when they've outperformed by about 17%, but we can start talking about it now again, yeah.
Well, so at a time like now, right, where you've got so much volatility in your top tech stocks,
Yeah.
would you say if you want to see if you see
I'd rather be in that one now. 17%.
if you wanted to take advantage of a kind of a more broad recovery, if you want,
too late.
if you wanted less, okay, or so you should just disagree. Fair enough, fine. If anyone was interested in equal
No, I
weight
agree.
ETFs,
They've got their place, definitely.
they've got their place. Maybe not for you, but maybe.
Well, they had the place 3 months ago.
Okay. All right. Well, we won't look at the equal weight ETF then. If anyone was interested,
Please look at the top 10 weighting being 2.4%. That has a great place for diversification.
that's all I'm saying. So for diversification, if you want less exposure to your big tech stocks that are more volatile, this is an equal weight for every share in the index.
Roughly. You get some that are like 2%, you get some that are 0.5%. So it's not truly 500 stock divided by 500.
Sure, but the top 10 are taking up a couple of percent of the weight rather than say 35%.
Yeah.
Well, I shouldn't have brought it up. Sorry for bringing it up, but that's if you wanted to look at an equal weight screener. That is how you would do it, and that's how you would compare it to the other ETFs you might have, like your standard S&P 500. That's the difference.
Yeah. What we got to look forward to on Thursday?
Well, it's whatever we want to look at. Nothing's planned. So I think
Anything could happen between now and then, right?
a lot can happen between now and then. If there's anything anyone particularly wants to cover, we can absolutely cover it. Put it in the chat. But I guess we'll see what happens over the next couple of days and try and look at something that I think would be relevant. I'll steer very well clear of equal weight ETFs because clearly that's upset you. But what we'll do is we'll look at something.
It's
we'll look at something more.
frustrating when you tell people about something 3 months ago and they say, no, we want to buy Palantir, we want to buy Nvidia at their highs, and the equal weights outperformed 17% since.
Yeah. Cool.
Now, what do you want to hear from people? What do you want to hear from Tom Wilson-Home on Thursday? Drop it into the chat. This guy has an incredible amount of information and tools now. Sits there next to the proper traders out on the desk and, feeds them all these great things, knows everything about the platform. So, really, really useful information.
Cool.
And yeah, it's one of those great aspects of the community that they can ask and request more of you.
Anything you want, we can do it. Absolutely.
Excellent. Right, we've Tom, how about VOD? Have they disappeared?
How about VOD? Have they disappeared?
Videos on demand? No?
Vodafone?
No, I don't think he. Andrew, give us more info. And then, has there been? I've noticed this knockout thing appear on my screen. What is that? Why has that been added to my menu bar on the left-hand side?
The knockout is really? You've got knockouts on your account?
Yeah, it's got here. It came last week under options. Knockout.
Okay, so knockout is a different type of product where the mechanism is more similar to an option. I actually didn't know this is on you. This is a UK account. I didn't know we had this now.
UK CFD. Maybe they're testing it out on me.
They could be testing out on you to see how you do. But yeah, knockouts is an interesting one. That's more similar to an option. You pick a knockout level, and that's the defined risk, right? So it's limited risk. So you know your risk up front when you place that trade, and it's priced like an option.
I'd like that on the Euro stocks if you can get it, or the FTSE. I don't think I want it on 10 cent.
But a knockout on what? On Euro stocks?
Or FTSE and S&P knockouts would be incredible.
Okay, no, I'll take a look at it. I didn't know we'd put that in because I can't see it on SpreadBets. Maybe it's just been launched on CFD.
Jesse would like to know how overnight funding rates are calculated for WTI and Brent.
I don't know that off the top of my head, but we can look at that on Thursday, definitely.
Yeah. Here we go. Andrew McKelvey, he was joking.
And you didn't suspect it.
Yeah, I thought it must be a serious question.
Are they saying that you just bang on about Vodafone so often, and they're wondering if you're okay because you haven't brought it up in a while? Do you want to bring it up? This is your cue.
I literally bought some this morning at 64.86. Right, a man whose wisdom is incredible, his knowledge of history even stronger. He's the voice of IG to the world's press. Can you guess who I'm talking about? Who's coming up next?
I'm doing another slot.
No.
I'm just in for the one.
Chris Beecham coming up after the break. Tom Wilson, thank you so much for your equal weighted tools. We shall see you on Thursday. I look forward to it.
You're welcome.
Well done on your demo. And very good time to come back in because the FTSE trying to grasp its way through the highs of the days. We saw it, it tried at 9 a.m. It's now trying again at 9:45, 7,840 in the FTSE. Let's see how that one goes. But we have our voice of IG, the voice of wisdom.
No, I wouldn't say that.
Chris, you've seen it all before. Take us through.
Yeah, it's unprecedented. That's a word that gets bandied around a lot, really. But I think it's something we've not seen for a long time, because the closest comparison you've got, I think, is still 2020, really.
Okay.
So the fact you had so much selling in such a short space of time from Wednesday night, you were watching it, I was watching it, and it just went from the moment we had that, and here's the big tariffs, and it's just been bang, 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 all the way down into Monday's lows. And then obviously you had yesterday's surge and slump again, but we're starting to rally. I think those hopes are coming back in again of some kind of negotiation, really. It's
Is it
mad.
Is it an alleviation of selling, or is it more genuine confidence?
It would be, yeah, I think, I've batted this back and forth with people before. All rallies begin with short covering, I think, is the people say, oh, it's just a short covering rally. Yeah, it is to start with. That's how all rallies start. And some of them go on to grow up into proper bull markets, and some of them fail.
Yeah.
So this definitely is the kind of, if you were short the market from Wednesday evening and you were down into Monday's low and you thought, okay, let's just step back for a while and see what happens. Then, yeah, that's your short covering, if you like.
There's the 2-hour chart. Okay.
Yeah.
So, as a reminder, on the fake Wall Street News Journal, as Wall Street Journal headline, we traded 5,720, and then at the panicked lows, we traded 4,791.
It's really interesting is we had the fake Wall Street Journal headline from Wednesday, and then that spoof moment yesterday where this headline came out of nowhere. It kind of bookends the last 4 days quite nicely, actually.
Very true.
In the short term, the sudden unwinding, the sudden.
Hey, fake news.
Yeah, it is really. It's a sort of parable for our time, really, I think. And then you just had the popping of this bubble. Oh, he's not going to do tariffs. It's not going to be too bad. Oh, dear. And then you've had that market overcorrecting to the downside in the short term.
Yeah.
I think we were discussing this on the desk a while back and saying, well, what if that is it? If that's the low and we do have negotiations and tariffs, okay, they do come in, but they don't last very long. Maybe that is the low.
There's two analogies that I quite like. We can take the chart off there, thanks guys. The first is a situation like COVID, I guess. No, August the 5th, right? August the 5th is when you get a beach ball and you push it down underwater.
That's my favourite one as well.
But this feels more like you've punctured the beach ball and then you push it down underwater and it kind of just meanders and floats back to the surface.
Yeah, exactly. And this is the thing we're saying, well, when we get back to, say, 22,000 on the NASDAQ, well, not as quickly as we came down from 22,000, because the old adage is that markets fall 3 times faster than they rise,
Right.
roughly. They take the stairs up and the lift down,
Yeah.
or the elevator down, as our American cousins would insist.
The
on calling it.
escalator up, and the
Exactly,
elevator down.
and the elevator down. So if it does recover, then yeah, I think it is months and months and months. But then, of course, as Larry Fink was saying yesterday, oh, I think we're in a recession already because we're talking to companies and it sounds already full of gloom and doom. And if this has done enough damage to tip everyone into the recession call, look at Japan, for example. The reason why they are so quick on the negotiations is because there's 8% of GDP is in the car sector, something like that. I think I might have overstated that slightly.
Yeah, I know it in terms of billions of dollars, but
so
not
it's a
in
massive hit to the Japanese economy if this stuff goes through.
But ramen's back on the menu.
Yeah, and again, we're back to policy making by trying to do macro outlooks on the basis of tweets.
So I guess, this whole episode is just one big advertisement for Trump Truth Social.
Yeah, because you've got to be watching it. Yeah, you've got to be keeping an eye on what he says. Yesterday with his more tariffs on China, if they don't where are we? If they don't impose their retaliatory tariffs on his retaliatory tariffs.
So Dr. Martin has come up with that stat, 2.9% of total Japanese GDP.
Which is still a massive...
30% of the manufacturing, 13% of the manufacturing.
Which is why the Nikkei has been so hard hit. And that was falling already. So you had a Nikkei that was in slump mode before last Wednesday, and then suddenly it really was a waterfall moment. You're right back to the August lows, or nearly to the August lows, because of this doom-laden commentary.
Yeah, there is our Japan 225.
Yeah.
mean, they are big numbers, aren't they?
They are.
38,000.
As you zoom in, you get the context of the move, because if you zoom further into sort of last couple of weeks, we really see how big those moves have been. It's been absolutely mental. The size of the losses and the size of the rebate. So Japan was up nearly 6% overnight. 6% for an index.
For an index,
The closest, well, again, August is the last time it was like that, which understates it.
And let's take a look actually at that daily and go back to the August. Look at where the lows are.
Yeah.
Now, I say I don't believe in technical analysis, but that is, I very much take that kind of thing to be real, because we had a buyer at 30,400 and we bottomed at 30,400.
This is where technicals and fundamentals almost align. Because you say, well, how much is the Nikkei worth on a PE basis, on a valuation basis at 30,000? You go, well, actually, I think it's good value there. So that's when they match up, it does work nicely. But there's an old saying that says everyone's a chartist in the sell-off, because we're always going, well, where are the levels here? Where was it last time? Where was it down here? And what happened? So suddenly you get dyed-in-the-wool fundamentalist investors going, where's the level here? Where are we going to get to? And what does it mean?
And we had a discussion 2 Mondays ago, which was, right, what's the real earnings for the S&P?
Yeah.
And we said it probably around 5,100. Bloody hell, I didn't expect us to be here so quickly.
Yeah, because now the market is pricing in a lot of doom and tariffs. So because
that's a Scottish accent, go on.
I can't do a Scottish. Doom. We're all doomed. This is a private phrase.
We're all doomed.
You do it better than I do, unsurprisingly. But now, because that's being factored in, you're saying, well, maybe I do want to buy the S&P here. Ronnie and I were talking about the Mag 7 PE ratios. Tesla's still on something bonkers like 114. But so much of it now has come down to, and I say this in very big inverted commas, more normal levels for that sector.
Yeah.
So it's not pricing in perfection anymore.
If you take out Google, which, there's concerns over the future of the business, and you take out Tesla on the upside, one's at 16, one's at 160.
Yeah.
And you look at Mag 5.
Yeah.
Really
they
interesting.
start to look, oh, maybe you would like to be a little bit long Apple at these levels. You just dip your toe in. Of course, if this was the low, big if, but if it does continue to rally, you don't have to go all in now. You could buy some, you wait for it to rally, you could buy a bit more. You could say, okay, well, my thesis has proven correct, if you like. I'll buy a bit more, but we'll see.
And we could see the S&P at 4,800, but some stocks higher than they are here.
Yeah, exactly.
It's a big argument for active management over passive. And if you have stock knowledge, as I'm guessing 250 people watching us at the moment are interested in stocks, you've got the knowledge, you want to learn more, or you've been in the markets, now you're sitting at home enjoying your coffee in the morning, having a bit of trading yourself, this is the time for you to know and put that single stock knowledge to work.
Yeah.
Or sector knowledge.
Yeah, this is what we said about you need to have a watch list of stuff you'd like to buy when it does come off like this. And you have to then put your emotions in the box and go, okay, this is when I said I'd like to buy Apple when it comes off. And so you do, because there's that old saying about when the time comes to buy, you won't want to. I'll buy when it's exactly. I'll buy when it's down 20%. No, you won't, because you'll worry that it'll go down another 20%. That's why you have stop losses. It's hard to control your emotions at the best of times, but it's for times like that you have to just say, okay, what would I like to buy if it were down here? Yeah. Almost close your eyes and press the button and just hope. But that's not advice. It's not a strategy. But it's saying, oh, look, you have to be prepared for this kind of thing, really.
And I'm happier to do that with my pension. As I said on Friday, I put 50% of my pension into equities. I've got another pension. What I do at the moment is stick it all into Japan, because that is a relatively small amount of my total pension pot. But I want to have exposure to Japan at these kind of levels.
You think the market is now pricing in too much doom and gloom? I think the risk is that you often see lows like yesterday retested. It doesn't do a 2019, if you remember. No, late 2018 when December, it was Boxing Day, wasn't it, after Christmas, and the Fed pivoted and the market bounced and just didn't look back. You don't usually see the low never tested again. You often see it go back again. It tries to, like now, it could rally another 1,000 points on the Dow, 2,000 points, come back down again and test it.
Yeah, what's that in real market?
In a proper index S&P, who cares? They're basically the same thing. We look at this over time. But yeah, you don't always see a retest, but you often see, it's one of those things, there's no hard and fast rule.
I think what's becoming even more of a almost consensual view, and the best view that I've heard, and you reiterated it this morning, is a bounce to 5,400.
Yeah.
And then we retest the low again.
Yeah.
I've heard quite a few really, smart people that have been doing this for a long time take that kind of idea, and that is alleviation of the selling. It is hope and hope. That gets us back to 5,400, and then reality
has to come in again. Maybe you get, following Tim Dewey, used to be, he's an economics professor, but he's very, very good on the Fed. He says what you haven't had yet is a hotter CPI print or a really nasty GDP figure or a big earnings miss. Of course, earnings season is next week. So it's too early. CPI is this week, so it's too early for that to show up, I think, in CPI. It might maybe show up in earnings, maybe this time around, maybe next time around. Maybe you do get a bit of an April-May rally, and then next earnings season you get a couple of shockers, and then the market retests.
Because how do you give guidance?
Exactly. Exactly.
What will be sure is that Jamie Dimon will be out on JP Morgan conference call. He already had a crack yesterday.
Yeah, he did. Yeah. And then you had Bill Ackman as well. That was funny, taking a pop at Lutnick. Did you see that?
No, go on.
He said the reason why Lutnick can go out saying all this stuff is because he's a bond guy and he profits when bonds rally. And then about 6 hours later, he came out and said, "I'm very sorry for saying that. I don't really mean that, Lutnick." So someone clearly picked up the phone and said, "Hi, you can't say that." It was very, even Bill Ackman, because he was all Trump will be wonderful. Lutnick's a sound guy 6 months ago, and then yesterday it was.
Nick cares about one person, and that is himself and his P&L.
Exactly.
Yeah, he's a very intelligent, nasty piece of work.
Yeah. You also had the Stanley Druckenmiller Twitter account replying to someone for about only the fourth time, because he has a Twitter account, everyone thinks it's him, and he's only had 3 replies to everybody, and there was one yesterday about, I think it's the right policy or something, he said, but not like this.
Yeah, that's it. And I agree. I think he's doing the right thing in the wrong way. We've just had a great shout from Dr. Watson out in the gallery that if Phil has a shave, and when he gets grey hair, he is spitting image of Bill Ackman.
We should get him on. He could pretend.
That's right, yeah. So Bill Ackman on the show tomorrow. Now, we've got 90 seconds left. This goes out as an appeal to you guys, our viewers. We've got the old YouTube, right? Have a look at your YouTube now. If you're watching on something called Trade Live with IG Old, you're in the wrong place.
Clues in the name.
Yeah, the clue is in the name there. Please go, and I'll even get this up. Let me try and go into the search bar with you. And because this isn't going to be around for long, this old one, at Trade Live IG, okay? No with, just at Trade Live IG. Search that one. Right, and then you'll get this thing here, Trade Live with IG, but it is the right account. We got 281 subscribers there. Get in now, be in the first 300. That is where it's all going on. That's where the chat is. That's where these videos are with the options for beginners, right? So we've now got, I think about 5 options for beginners. The trade of the week goes up there from Axel. He told you to short NASDAQ 8 days ago. And we've also got the updated videos from me there of what goes on. This one's on tariffs. It's got 800,000 views on TikTok, but we make sure we get it up on that YouTube first for you as well. So give us a subscribe, give us a like, give us a thumbs up in the share it with your friends. We really appreciate the support. Obviously, we've moved YouTubes. We think this one gives us a lot better chance of getting the word out there, so we start to get more people into the community and get the knowledge of the likes of Chris Beecham out there. We'll finish with Baby Grand's comment. Do you agree with it? Stops are for buses.
No.
Hedges are for gardeners.
Yeah, exactly. They all come out, don't they? The cliches come out in a crisis.
Brilliant. Thank you so much for joining us today. That's it. We've got through 2 or 3 of the hardest days. And are we out the woods just yet? Don't know.
Yeah. Ask me again in 6 months' time.
Well, yeah, ask us again in about 21 and a half hours time. We'll see you 7:30 sharp tomorrow morning. What's going to happen between now and then? Good luck to you. Stay small, stay safe. We'll see you tomorrow.
Bye-bye.